Hello and welcome to Active Finance YouTube channel. Today's our topic is liquidity ratio. So let's get started.
Alright, welcome back. Liquidity ratio. This is the part of financial statement analysis. Previously we have done the introduction of financial statements. Now we have to analyze. These are some ratios which we have to cover in this. First one is liquidity ratio. It shows the company's ability to cover its current liabilities from its current assets. हम करंट रेशो इसलिए यूज़ करते हैं कि हम कंपनी की परफॉर्मेंस मेजर करने के लिए कि वो करंट एसेट से कितनी करंट लायबिलिटीज़ जो है कवर कर सकती है. तो करंट रेशो का जो फार्मूला है वो विच इज़ करंट एसेट्स वी विल डिवाइड इट विथ करंट लायबिलिटीज़. सो दिस डेटा you will find in balance sheets. So here I have mentioned that you can easily understand that where you have find this data. From balance sheet you will find the current assets and current liabilities. So let's have a look on balance sheet. I have taken the balance sheet from Basket Wonders. So here we will find the current asset. These are the current assets of Basket Wonders and these are the current liabilities of Basket Wonders. So now current assets include cash, account receivables, your inventories, prepaid expenses, accumulated taxes, prepay. So in current liabilities are included notes payable, accounts payable is all about current assets and current liabilities. Now solve the current ratio of this company. Now we will divide the current liabilities with current assets and we will get the current ratio which is 2.39. And now we will look at the previous data of this company. Here is the comparison of current ratio of Basket Wonders, which here I have mentioned 3 years data of Basket Wonders. So in 2019 the data is 2.39 which we have found in current ratios, and the industry's current ratio is 2.15. Every organization have its own ratios. So here the Wonders current ratio is 2.5. It means the ratio is stronger than the industry's average. So this is current ratio. Now there is another ratio which is included in liquidity ratio, which is quick ratio. Now we will find quick ratio of liquidity. So this is the second ratio in liquidity, which is current quick ratio. It is authentic than current ratio. So it is also called as acid test or quick ratios. This data we will also find from balance sheet and shows. This is the definition of quick or acid ratio, which is this ratio is calculated by deducting inventories. In this we will deduct the inventories from assets and then divide by current liabilities and we will get the quick or acid ratio. Now here let's solve. From current assets we will minus inventories and then divide with current liabilities and we will get the current quick ratio of Basket Wonders. I have data this also taken from the balance sheet that which is already mentioned in this. So here we will get the data from balance sheet. This is our inventory. This is our inventory value. We will deduct from current assets. Here we have deducted the inventory from current assets and then we will divide with current liabilities and we will get the quick ratio of this company. Now let's have a look on comparison, quick ratio comparison of basket bonders. So here is 3 years data of basket bonders 2019, 18, 17. So this is between these ratios. So now current quick ratio of this company is 1.00 and the industry's standardized value is 1.25. It means that the ratio is weaker than the company's average. So have a look on problem. Now have a look on problem, that where is problem. It means it identified that there is inventories. Now summary of liquidity ratios comparison. Here is the liquidity ratios, which first one is current ratio and second one is asset or quick ratio. So these current figures are given here and this is industry's average ratios. So here is a statement which we have analyzed in our analysis. A strong current ratio and weak asset ratio indicates a potential problem in the inventories account. It means there is the problem in inventories account. Note, now we will note that industry has relatively high level of inventories. That's why this industry has the lesser asset ratio because of high level of inventories. So this was all about liquidity ratio. And if you have any kind of question, kindly drop in comment box and share this video. If you haven't yet subscribed this channel, kindly do subscribe and click on the bell icon for getting latest uploads.